Welcome to today's deep dive. We are really glad you're joining us for this one.
Yeah, absolutely. Thanks for tuning in.
So today's mission is unpacking a recent Benham and Reeves market update. We are looking at the surprisingly stubborn resilience of the 2025 UK property market.
Which is honestly just a fascinating situation to watch unfold right
It
now.
really is. Okay, let's unpack this. Because the relaxed stamp duty deadline ended back in March.
Right, the holiday officially wrapped up.
Exactly. And typically you would expect that to instantly cool the market. But instead, Rightmove reported a 1.4% jump in April.
Just in April alone, yeah.
Yeah, pushing the average UK property asking price up to £377,182. And this is all happening alongside a decade-high number of homes for sale.
What's fascinating here is the buyer psychology underneath those numbers.
It totally defies the textbook logic. You've got more supply and a removed tax incentive.
It does, but despite that tax change, buyer demand is actually up 5%. And that massive queue of pending sales is finally clearing. Buyers are pushing forward because they are heavily anticipating the Bank of England reducing its base rate in May.
Oh, I see. So they want to lock things down now before a rate cut sparks a massive bidding war.
Exactly. It's a calculated gamble. They are swallowing higher costs today, betting on borrowing costs dropping tomorrow.
That makes a lot of sense when you layer in the broader macro context, too. I mean, inflation dropped to 2.6% in March.
Which definitely gives people the nerve to make those massive financial commitments.
Right. Plus, you had the UK economy growing by 0.5% in February, and that was mostly driven by the services sector.
The macroeconomic floor is definitely solidifying. But if you really want to see where that confidence goes into overdrive, you have to look at the London microclimate.
Oh, London is operating entirely on its own frequency right now. The average property price there is sitting at £699,200.
Which is just staggering.
It is. That's an 85% premium over the rest of the country. And not only are prices up 0.5% from last month, but homes are actually selling 4 days faster.
Yeah, and that momentum isn't just about housing scarcity. Local boosters are actively pumping the engine. Like, the mayor of London just put a £27 million investment into a skills program for green and digital jobs.
Fast-tracking local workers into high-productivity sectors.
That's precisely. It signals long-term economic vitality. It tells both local buyers and foreign capital that the city's earning potential is growing.
And speaking of foreign capital, the rental stats right now are basically a neon open for business sign.
They really are wild.
Across the UK, average private rents rose 7.7% to £1,332.
Ouch.
Right. But inner London, the London averages hit £2,243, up 9.1%. And Kensington reached £3,639 a month.
If we connect this to the bigger picture, it's absurd for the tenant, but highly lucrative for an investor. Those aggressive rental yields are exactly what's driving international investment.
The gold mine.
Absolutely. For example, buyers in Hong Kong and Malaysia are snapping up properties in commuter hubs like Reading.
Just because of the transport links.
Exactly. They are lured by that mere 23-minute train commute to central London via Paddington.
So what does this all mean for you listening? Whether you're navigating a tough rental market or just watching the economic trends, this deep dive shows how local housing is heavily insulated.
Yeah, it's wearing heavy armor right now.
It really is. It's being heavily propped up by international demand and those high hopes of falling interest rates.
That is the core of it. But I'll leave you with a final puzzle to mull over. If global investors are eagerly buying up spots in commuter towns like Reading purely for their high-speed rail links to Paddington,
Right.
will the traditional borders of what we consider London eventually expand so much that inner-city price premiums start to vanish?
Oh, that is definitely something to think about. Thank you so much for joining us for this deep dive.
Keep questioning the data, and we will catch you next time.